October 9th, 2024. Today was a pretty strong bull trend day that got up to the new all-time high. And one of the reasons that I thought the prior day's high was important was on the daily chart. If you look at the daily chart with Globex, this was a bull bar closing near its high. So the prior day, Tuesday, on the daily chart was a bull bar closing near its high, and it was a buy signal bar. The problem was it was in a tight trading range, so the bulls needed really good follow through. So I didn't think the odds were, I didn't think this was a high probability bull trend day, but you can see obviously we ended up getting one. Bar one, a doji bar. So you can see we ended up getting sellers above bar one. It's a wedge right here. Sorry, I meant to say we got buyers below bar one. It's a wedge, but it's a bear bar. So most traders do not want to buy above bar one since it's a bear close. Bar two, an outside up bar. The bulls are hoping we have a wedge, 74, 79, and 1, and that this outside up bar is the start of a big bull trend, which it did end up being. However, on the close of bar two, what are the odds that this is going to be a big bull trend and that this is the low of the day? Probably like 25%. Not really all that high. It obviously did end up happening today, but it's not high probability at this point. Bar three, a big doji bar. So the bears see a double top bear flag with bar 78 yesterday. So a double top here. They want to break out below the neckline, the bar too low, and a measured move down. But not really very high probability considering bar three could not close on its low, and it failed to get below the moving average. And that was the common theme here that you had to pay attention to, was there was no close below the moving average for the first 30 to 40 bars of the day. So you knew when we got to the moving average the first time, odds were, even if we went sideways, we were going to end up trying to test up back up into this area. Because when you get the gap bar in here, you know that the odds are we're going to test back up to this area. We might go a little bit lower first, like we did. You can see bar 53 sold off to around the 50% mark of the rally, almost exactly the 50% mark. So that's what this was testing. However, if you stayed calm and you were a bull who bought way up here with a really, really wide stop, you scaled in around 50%, you would have been able to make money on your second entry and break even on your first entry. Bar four, an inside bar, a bull bar, but a large tail on the top. So not really quite worth buying yet. It's a high one for the bulls. So this is their breakout. This is a breakout pullback, and they think bar four is their high one and a possible bull trend. We still haven't gone below the moving average yet, so it's looking a little bit better for the bulls. However, they need good follow through. They need a good breakout above yesterday's high. Coming into today, the all-time high was around 58.27.5, so up in this area. So this would be the target for the bulls if we were to rally and break above yesterday's high. You can see we got there and we ended up oscillating around it a little bit. We came back to that price and retested it. Another inside bar. So we have consecutive inside bars, II on the open. And II is on the open is, pretty common. Or sorry, it's not all that common. I have IIs as well, but on the open and II, they can often lead to big bull trends. You see an II after a sell climax. Sometimes the context is different. It's an inside pattern on the open. So they're not necessarily super common, but when you get them, sometimes they do lead to big trends on the open. So you have to keep that in mind. You can see we got an II here, 32, 33. So it's a breakout mode pattern. And when you get breakout mode, so these are three consecutive inside bars. So examples of three consecutive inside bars. And you can see it's here, final flag, a failed breakout above, a failed breakout below the final flag, reversal. Here, three inside bars, failed breakout above, and a breakout below and a reversal. So the important thing to realize once we get the third inside bar in bar 6 is that the market is in breakout mode. And when we're in breakout mode, generally 50% chance of the first breakout failing in either direction. However, you have to keep in mind, I think we're going to yesterday's high, right? The Tuesday high is a buy signal bar. So we're probably going to get above Tuesday's high. Will we succeed in a breakout above Tuesday's high? We're not sure, but it'll probably pull back before it rallies if it does become a successful breakout. So you have to imagine we're probably not going that much higher without pulling back. So bar 7, a doji bar, probably buyers below the doji bar, scaling in lower. Not really worth shorting. I think if you bought, just stay long. You could have bought above 6, tried to buy above 5 and get filled. You can just buy above 6 and leave your stop below bar 2. So 3 consecutive inside bars, breakout mode, taking a chance that it's the low of the day, and you buy, put a stop below 2, risking 10 or 11 points, which is big risk, so trade small, but looking to make 30, 40, 50 points. So okay, reasonable math to take the trade above bar 6. So 7, a doji bar, a breakout pullback for the bulls. The bears are hoping we're forming some sort of wedge, maybe 1, 3, and 7. However, if it's going to be a wedge, the bears are going to need a better signal bar, and they're also going to need to get below the moving average. 8, outside up. So buyers below 7 during 8, and we get a big outside up bar. It's still a possible wedge, 1, 3, 8, but probably buyers below scaling it lower. 9, another bull bar, probably buyers below 9. There were probably buyers below 7 as well. You can see we had a microchannel from bars 2 to 6, so not surprising there were buyers below 7. And there should be buyers below 9 as well, considering we haven't gotten below the moving average yet today. It's still a second reversal down, so some traders might choose to buy 1 to 2 points below bar 9 if they can get filled and just look for a scalp. Again, it's unusual to just continue up all day like this. This is pretty abnormal. In general, if you're going to get a bull trend from the open, that's going to get a big second leg at the end of the day. You want the bull trend from the open to last probably like 18 to 20 bars. So you want it to be stronger as well. So let's pretend that bars 1 through 17 didn't happen and pretend bar 18 was bar 1. If we had gotten a rally from basically bar 1 to bar like 15 to 20 and then started to go sideways the way that we did, that would have increased the chances of a second leg happening today. However, the move up from 2 through 29 was so climactic that we were probably just going to end up going sideways the remainder of the day like we did. Usually when that happens, you don't get another big move. 60% chance you're just going to be sideways the rest of the day. So 10, a high 1 bar for the bulls, but it's a doji bar, so probably sellers above, scaling in higher. But still a high 1 buy for the bulls. 11, a follow-through bar. So a tail on the top, but still a good bar for the bulls. We're still going higher, and we've only had 3 bear closes so far today. So the bull closes are not overwhelmingly strong. We don't have any bull bars closing near their highs. We don't have consecutive bull bars closing strongly above any breakout points. We don't have open gaps, but we're not getting bear bars. So we keep getting doji bars and bull closes. As weak as the bull closes might be, we continue to get them. So we are going to go higher here. 13, an inside bar. It's a high 1 for the bulls. You buy above 13? You probably can. Just taking a chance that we've seen the low of the day, you can probably put a stop below 10, because if you're buying up here, realistically, you're hoping that this is a bull trend day. One of 2 things is going to happen here. We're either going to get a breakout above the bull channel, because this is a bull channel. You can see the high 3, 9, 12 are the highs. So we are clearly in a bull channel. And the bull channel will usually evolve into a bear flag and then pull back and form a trading range. However, we're getting a pretty tight channel up, and we have not closed below the moving average yet today. So an increased chance that we're going to get a breakout above the bull channel and some sort of measured move to the upside, maybe somewhere up here, something along those lines. 15, a bear bar, so disappointing follow through for the 14 bull bar closing near its high. You can see there was initially sellers above. Bulls were probably pretty eager to buy below 14 if they were able to get the chance, but you can see traders, we did not trigger the buy below bar 14. We also have a micro channel forming from bars 10 through bar 15 at this point. So it's a 6 bar bull micro channel, taking a chance that we're not going to trade below another bull bar. 16, a bull bar closing near its high. 14 and 16 are good looking bull bars. So if you notice, the price action is getting stronger. We were getting, weaker bull bars, 8, 9, 11, 12, 13, and then suddenly 14 and 16 are both bull bars closing near their highs. The first bar is closing near their highs since bar 5. The bears are hoping that this is climactic and that we're going to get a final push up, and then we're going to fail to break out above the bull channel, and we're going to get a reversal back down to the other side. However, the fact that the bears have only had 4 closes and 16 bars, and we don't have anything below the moving average, so there's no reason to sell. The bears are not doing enough. So for me, I think it's probably just better to wait. If you're going to sell, or to be long. So you can be long above pretty much any bull bar at this point. 17, a breakout attempt above the bull channel, or you could argue wedge 3, 9, 12, and it's a breakout attempt above the wedge. Initially pulls back, but again, nothing to sell. There's going to be buyers below 17 if we get there. We have a micro channel since bar 10, so bulls eagerly buying the close of 17, knowing they're going to be able to scale in lower if we go lower, and they're probably going to make money. And then you get a bull breakout on 18. So 18 is a breakout bar, somewhat of a give up bar from the bears, and it increases the chances that we're going to continue higher. So some traders will buy the close of 18, looking for a measured move up based on the height of the breakout. This is a leg one, 16, 17, 18, and they'll buy expecting at least a small second leg up. You could use that measured move. Some traders will wait till the end of the move and then maybe look for a leg two or something like that, but it can be difficult. 19, follow through, but a large tail on the top. Still follow through for the bulls, though. We have an open gap with the bar 17 high and the 19 low. You can see bulls bought the close of 18. We did not trade one tick below the bar 18 low. So odds were that we were going to get at least a little bit more to the upside. 20, bar 20, a bear bar. It's a double top, 19-20, but large tails. Good for the bears, I suppose, that there's tails, but it's really not that great. It's still just another bull bar. You know there's going to be buyers below 20 if we get there. And you can see bulls so eager to buy. They bought the close of 20 instead of buying below it. We were never able to trade below it. So we have, 5, 6 straight bull bars so far. Odds are we're going to continue higher. 22, another bull bar. It's an inside bar, so we have an IOI pattern. 20, 21, 22. Increased chance of some sort of rally and at least a second leg up. Do you buy above 22? I think you probably can. Again, it's okay to buy any of these bars, but you have to notice at this point we're pretty overbought. So we're probably going higher, but we're getting really, really overbought. We are going to touch the moving average today because 99% of days end up touching the moving average. So taking a chance that this is the 1% of days where that doesn't happen really isn't worth doing. 23, another bull bar. So nothing to sell, right? We have so many straight bull bars that there's really no reason to sell, but it's hard to look to buy after, so many bull bars. It's really, really climactic. 24, an inside bar, probably sellers not too far above, probably buyers not too far below, but it's a high one for the bulls. So initially, at least expecting sellers above. 25, another bull bar, but a tail on the top. It is triggering the high one above bar 24. It is a strong bull trend in a tight bull channel and a 20 bar bull micro channel, but for what it's worth, you have to be thinking that the traders who sell above the high one, you never want to buy above a bear bar. So you have to be assuming the traders who sell above 24 with a really wide stop and are willing to scale in are probably going to make money. 26, another bull bar, still tails on the top, but nothing to sell. The move up is so strong. 27, another bull bar, tail, but still, again, the move is so strong to the upside, there's nothing to do. 28, another bull bar, but again, same thing. Are you shorting here? No, there's nothing to sell. So you're either buying for probably a scalp at this point. While you do have the protection that it's a 20 bar micro channel, when the market is this overbought, it is still going to come back to that price. So, in theory, you could buy below 30 because it was a 20 bar bull micro channel. I'll just finish 28 bull bar, but tail 29 bull bar closing near its high. It's the only bull bar since bar 16 to close on its high. So a little bit suspicious, possibly the end. And then 30, a bear bar, but not very strong. But you can sell below 30 for a scalp to the moving average because this bull trend is so overdone. Bulls who bought pretty much anywhere have a large profit and they're probably going to take some off. So traders are going to exit below 30. Most traders are not going to hold below 30 because the reality is we're probably just going to be sideways the rest of the day. There's really not that much left to this trade regardless. So a lot of traders will exit below 30. Could you, in theory, buy below 30 with a really wide stop and scale in and have a very high probability of making money? Yes, but you need to have a very wide stop and you need to be willing to scale in all the way down to the 50% pullback that we got on bar 53. So while there is probably buyers below 30 scaling in lower, some traders can sell it, betting where the bulls are going to exit and we're going to get two legs sideways to down to the moving average. 31, I think obviously a combination of some bears selling for a scalp, knowing that we're probably going to close this gap and get back to the bar 24 high and get back to the moving average. So traders know we're probably getting back into this area. Some of them will sell below 31, but probably just selling for a second leg down. Traders who didn't want to sell below 30, they want to follow through. They got 31. And so what do if they don't want to sell below 31 because of the risk reward? They sell a 50% pullback. So it's not worth buying 32, the high one, because you're going to have bears being willing to sell the 50% pullback. They know 30 and 31 is strong enough for a second leg. However, the math really isn't all that great. So they look to sell a pullback for a scalp. Because if you think about it, if you sold here, trying to get to here, you're trying to make 4 points and you're risking 7 or 8. All of a sudden, if you're selling here, you're risking 3 points and you're trying to make 7 or 8. So you're flipping the trader's equation. And you still have a reasonably good probability. What you're doing is selling above 32, taking a chance that that's not going to continue the bull trend, which is pretty likely that it's not going to. 33, a bear bar closing near its low. It's probably just the start of the second leg down from 30 and 31. The bulls, they know we're probably going to get a couple of legs sideways down, so they're okay if it goes lower, but they have to be expecting traders to buy the moving average. Consecutive bear bars 33, 34, but you're not selling 34. It's the first time, we're trying to get a close below the moving average all day. I'm not selling today, period. I mean, with the move from bar 1 to bar 29, the bears would have to do something dramatic in order for me to want to sell. But this is such a rare and extreme bull move that there's almost nothing the bears are going to do that's going to make me want to sell. So for the rest of the day, you should just be waiting until we try to get trend resumption at the end of the day, because it is a little more likely that we're going to try to get trend resumption with how strong this move up is. 35, an outside up bar. You can see there were buyers at the moving average for a scalp. So this is more of a buy the close bar than a sell the close bar. 36, an inside bar. It's an IOI pattern. Probably buyers below 36 willing to scale in lower. 37, a bull bar, a high 1 for the bulls, but really not all that good. They're hoping this is the breakout, this is a pullback, and that the high 2 is going to work and we're going to get a swing up. But I don't really think it's all that great to be buying a high 2 after this really tight channel down from 30 to 35. And, with how extreme the bull move is, 5 or 6 bars is not enough for a correction. We're going to need 20 to 30 bars at least. 38, sellers above 37. Even though 34 is not a good sell to close bar, the traders who sell that close and scale in will probably make money. You can see, I would imagine 40 pulled back to around the 50% correction, this general area, where bears were willing to sell rather than selling the 34 low. 39, a bull bar, but this is just a tight trading range. Outside bar 40. 41 is a wedge, 31, 34, and 40. You know that there's going to be buyers in this area. Again, not really looking to sell. To me, this is more looking like an area where traders are going to start to look for reversals back up. 41 is the first close below the moving average all day today. So you have to imagine there's going to be buyers stepping in here pretty soon. Bar 42, a bull bar, but not really worth buying. You can see traders more interested in buying below. It is a wedge bottom, like I mentioned, 31, 34, and 41. The reality kind of the situation is, that this is just a pullback, right? This is not going to be a trend reversal. Best case scenario for the bears, they get a lower high major trend reversal, which they tried to on bar 48, but it's probably going to be a minor reversal with how strong the rally was. So even if they get the pattern, it's really not going anywhere. So you can kind of just buy the market and use a really wide stop and be willing to scale in, expecting that we're going to get back to the bar 29 close at some point today, or worst case early tomorrow. 43, buyers below 42 during 43. You can see probably not going that much lower. 44, an inside bar, a bull bar. So it's a 3-bar tight trading range, 42, 43, 44. You can buy above 44 for a swing. We're probably going to rally at least a little bit, but I'm not sure how much higher. Again, I think we're getting back to the bar 29 close. I don't know the path that we take to get there. 45, consecutive bull bars. Can you buy the close of 45? Yeah, you probably can, but there's going to be sellers at the bar 40 high and the 41 high, since it's the sell climax high. And then you think about it, if you buy the close of 45, how often do we rally straight back to the bar 29 close? Probably not very often. So you can see 46, a bull bar, but we end up getting a huge tail on the top. It's a possible wedge, 36, 40, and 46. So not really as good as it could be. 47, an inside bar, a bull bar, double top, 46, 47. 48, an inside bar, probably buyers not too far below. 48 is a lower high major trend reversal. So we have the bull trend line, basically this, and then a break, 3 pushes down, and then a lower high, 48 major trend reversal. Probably buyers below major trend reversal usually only has about a 40% chance of leading to a bear trend. And even in this case, with how strong the bulls were earlier today, I would say it's probably more like 30. So sellers above 48, probably for a scalp. 49, a bear bar. We're probably getting back to at least the bar 44 high, the swing point, but I'm not sure how far down we're going to go. 50, a bear bar. So 3 straight bear closes, good for the bears. 51, again, sellers above 50. So 50 was a high 2 in the middle of a trading range, not good in a bear bar. So 51, a bear bar closing near its low, 4 straight bear bars. we're probably going at least a little bit lower. 52, a bear close, tails on the top and the bottom, and then 5 straight bear closes, bulls give up, right? If they bought, they were taking a chance that we were going to bounce back to the bar 29 close pretty quickly. And we've now gotten 5 straight bear bars, so we're not going to do that. So they give up, and that's what causes the huge bear bar on 53. But again, it only sells off to the 50% pullback of the rally, so bulls are eagerly awaiting to buy so that they can get in on the trend. And the risk reward is good because if you're buying around a 50% pullback, you know there's at least a 60% chance we're going to get up here before we get anywhere down here, if not higher. That gets bought up. 54, unable to close bearish. If it was, it would have been good for the bears and possible follow through, but instead, disappointment. Bears buyback shorts, causing 55. You can see, but no one really wants to buy above 55. Big bar, big risk. If you do take the buy, you need a wide stop. You can't buy above 55 with stop below 55. Buying above 55 with a wide stop is buying a bull bar, yes, but on a flat moving average with a big bar, big risk. So really not that great. 56, a bear bar closing near its low. You can see we rallied back to the 53 close. So bears, they sold. Maybe they sold around the high of 53 since it's a sell climax high, and they're looking to get back to the bar 53 close. 56 is a low one short after the breakout, but it's not a very strong breakout. It just looks like a wedge. 57, follow through for the bears, but again, a huge tail, so more of a bull reversal bar than anything. 58, 3 straight bear closes, but I don't think we're going that much lower. 55 was a good looking bull bar, so we're probably going to try and rally back to that area at least. And with the earlier day context, it's starting to get into the window where we could make a move for the to the upside. And usually the market will try to trap you out a couple of times before it makes the move, and 53 could have been trapping traders out. If you bought again above 55, now you have 4 straight bear closes, so disappointing. And then surprise on 60, though we'll probably get back to the 59 high since 4 straight bear bars. Possible wedge 54, 56, and 60. 61, an inside bar, low one short, or wedge short, but it's not worth selling. Possible head and shoulders 40, 48, and 61, but probably a second leg up from 60. 62, an II pattern, probably sellers above. This is just the middle of a trading range. Nothing's that good. Nothing's worth doing until we can get good-looking bull bars closing near their highs. 63, another bull bar, rallied to around the 60 close and started to sell off. 64, 3 straight bull bars, but not that good. A bear bar, 65, probably buyers below. 66, a bull bar, double bottom. Bulls want breakout, pullback, double bottom from 60, but not really as ideal. 67, buyers below 67 during 60, or below 66 during 67, and outside bar 68. 68 not only tests the bar 59 high, but it tests the bar 60 low. So bar 60 is going to get a second leg up. However, you can get a deep pullback first. Just like the sell climax high, 53 high is resistance. The 60 low, bar 60 is going to be support. So just keep in mind always in trading ranges, buy climax lows and sell climax highs are always support and resistance. 69, an inside bar, a bull bar, but a doji. So possibly a wedge pullback 1, pullback 2, pullback 3, theoretically a buy above 69, and then you get follow through 70, bull bar closing near its high. You could buy the close of 70, or you could buy the close of 71, leg 1, taking a chance you get a second leg up somewhere up here. We're probably going to get to this area, so some traders will scalp out when we get here. It's a possible wedge, 56, 60, and 71. However, I thought the fact that the 29 close was such an important magnet, and we probably had to get there. I thought that increased the chances that this was not a wedge and this was actually a new breakout. 72, a bull bar, a bull close, but a doji bar, and then a bull surprise 73. Everybody bought the market and we raced up to the magnets. And then 74, bulls exit. But when you get the bar like 73, it's climactic. It's probably the end of the trend. But 60% chance of one more leg sideways to up, and 60% chance it's the end of the trend. So what's your one more leg sideways to up? 76 and 77. Stop orders on the day, probably buy above 5 or 6. Kind of hard to buy in here. You could buy above 14. You could buy above 16. You could buy 18, 19, 20, 21, 22. These are all by the close. But, this is still by the close, but hard. You got to exit below 30. You could sell below 30 for a scalp, though. You're probably only trying to get to moving average. It's good for 30 because the risk is small. And we're so overdone that bulls are probably going to give up. So you're trying to make 8 or 9 points, and you're only risking 2 or 3. So you have good risk reward, and I don't think the probability is bad either. So it's okay to sell below 30. I probably would not do anything else until 670 probably, or 71. You can buy either one of those closes. Just in the middle here after a big buy climax, you just have to, let the market be in a trading range. It takes a while to just become at peace with it. But once you start to do this, you should just take an hour at least and just go do something else, because the reality is there's probably not going to be a good stop order set up in the next hour. We're probably going to form a trading range, and the low could be somewhere down here, and the high is probably up here. We're going back to this area, but you don't know how far down you're going to go. For limit orders, you could buy below 9. You could probably buy below 7. I would not buy below 30. You could buy the 50% pullback of the move during 55. Those are the easier ones, I think. At least the first two. That's kind of tough to do real time with the 6th straight bear bar. On the daily chart, we have consecutive bull bars breaking up to a new high. So we're closing at the new all-time high. So the bulls need one more follow-through bar for it to be by the close and possibly going higher. Again, possibly a wedge forming, but we're just continuing to rally. We'll probably end up going to 6,000 before we go back down, even into 5,500 area. I don't know how soon we do it, though. The weekly chart, 5 straight bull bars, it looks like, possibly like 1 leg 2, but seems to be still going higher. And the monthly chart, we did trigger above the September high today. So we are now officially on the buy above the September high. So interesting to see how the market reacts to that tomorrow. All right, that's going to be it for today's review.